All right, let's get started here on the morning analysis for today. This is the S&P. Let's pull up a daily chart and start there. I know it's kind of tough to see with all these lines from the the 15-minute anchor chart. But the bottom line is what I'm trying to pay attention is this thing just keeps on pushing higher, guys. As you see right now, we're getting ready to retest the highs. We're getting all the way up there to retest the highs. What's going to happen when we get there, we don't know. But also, I know for a fact back here, we're like, oh man, we went on a nice push here. There's no way we can break the highs. And what happened? Sure enough, we broke the highs. Right here, no way we can break these highs, right? Absolutely no way. Sure enough, what happened, guys? We were able to break the highs. Same thing happened. I know we've had the pullbacks are getting just a little bit bigger here. Every single time you see a pullback, guys, they're getting a little bit bigger. That is a sign of a little bit of a weakness to the upside. So one of these are going to hold. We know that. Which one, we don't know. So as an intraday trader, we got a little advantage here. We don't really have to worry about that. We do have to worry about it when it comes up here to, as you see, 1705. We're literally, I guess, 6 points away from that, guys, on the S&Ps. So that's, I guess that's pretty significant. So I guess about 8 ticks. Sorry about that. Or 8 points. But we're getting there. So we're basically there now. So what I mean by we got an advantage of it being an intraday trader is that all we have to worry about is what we see on an intraday chart. Me, I use a smaller time frame to manage. So I really don't have to worry about it. I just got to be cautious to use the support and resistance, in my favor. As you see, we're still pushing up. As I recorded in my post on the blog for this morning, we're taking nice measured moves back and we're just continuing to push higher. Every move back, continuing to push higher. And as long as that continues, I will hold this type of strategy moving forward. As you see, yesterday we held a nice 50% pullback, a nice trading range pullback from these lows to most recent highs. You see the 50% area held nicely. Also came right in line with the previous highs, so we had a nice support, came down and bounced nicely. Now what we're dealing with is looking for that follow through. Are we going to see this thing continue to break highs and get up to that 1705 resistance that we're looking at, all-time highs? Or are we going to start to see this thing fizzle out just a little bit? All we got to do is start seeing lower highs and lower lows, and that could be a big sign of whether it be another pullback on a daily, weekly time frame, or is this going to be somewhat the highs? We don't know. All I know now is on a smaller scale, 15-minute, 5-minute charts, this thing is still pushing higher. So what am I going to do? I'm going to continue to buy these pullbacks until they fail. As you see right now, on an intraday time frame, this is a 15-minute anchor chart. 15-minute anchor chart. I use a smaller time frame to actually trade. I'm going to have to wait for this crude to come on back here. I'm going to wait for it to retest this trend line. Also, if you draw from the low to the high, we got some Fibonacci numbers that come in here. I'm going to see if this can come back here, hold these, and on a smaller time frame, get a little bounce to give me an opportunity to actually trade this back to the upside. Like I said, I'm going to continue to try trading this to the upside until it fails. Whenever it fails, I know I need to move on, start to adjust my strategy to watching, to watching the downside a little bit more. But as of right now, nothing's failed. Everything's holding. So I will continue to look for long opportunities to the upside. Like I said, till they fail. So that's what I'm seeing in the indexes. Let me quickly move over here to the Russell. Same thing happened here, guys. Same thing in the Russell. Just keep on seeing these stair steps up. As you see, they seem like they're getting a little bit weaker right now. So maybe a heads up. Maybe look for this to possibly start rolling over. But like I said, until it fails, I'm going to continue on with this, progression to the upside. So we could see a little bit of a change here, being that we're getting into the previous, the daily highs, the weekly highs, getting into all-time highs. for that matter. So that's it on the indexes. We'll move forward. Like I said, I'm going to keep on trying to buy pullbacks, but may get a little bit skittish and maybe look for other markets to trade during this time. Here is the euro, guys. Euro. We'll quickly pull out a daily chart on that as well. As you see, the euro is not anywhere near the highs, not anywhere near these previous highs that fall in this trading range up here. They've been tested over and over, even in the past, over and over. As you see, we had a little fake to the upside here, break above this level, came back in just enough to come back and retest it again. We're not quite up there, so what I'm going to show you is we are channeling up, as you can see here. We're not quite to that resistance, so I will continue my push to the upside. Also, we have a low to high pullback here in that 50% range on a Fibonacci pullback. That target comes up here closer to these previous highs, so that's another mental note. On an intraday time frame, we're also going to just look for these pushes to the upside. As you see these Fibonacci numbers that are coming in right here, this minus 23% and the 61.8%, they come in right here at these previous highs. I'm going to show you the significance of that on a 15-minute chart in 1 second. But anything above that, you're going to see we have golden ratio all the way up here. That's getting up there near them highs. But what I'm worried about right now are this 61.8 and this minus 23%, which, mind you, come at the same price level. So what's the significance of that? Let's go over here to an intraday chart. Pull up the 15-minute anchor chart once again. As you notice, we are channeling up, guys. We are channeling up. That's pretty obvious. We're channeling up. We're holding our trend line right now. We're coming back, retesting it as we speak. So we are still pushing to the upside, and you're going to notice a couple things here, guys. A lot of you are going to notice the second chance that I have marked up here. What that is you see a low to high, 50% pullback, comes right here. The market pulled back 50%. We got a thrust to the upside. Now, yesterday in the room, I did have a member, or an individual, he's not in here yet, but he said, what about the second chance? And I said, yes, we got a second chance. So he I think, bought him that positive, but this is a second chance. It's a retest to the 38, and the target is the extension. As you see, I have two different fibs drawn. You see this line drawn? That's the pullback. And then you see this dotted line here, and I took it to the most recent lows right here. Now, remember me talking about the 61.8 and the minus 23%? What you're looking at here is the 61.8% extension from this extension, this second chance entry right here. And you're seeing the 23% full pullback for the retracement right here. So that could die as a very significant level. Not only is that the 61.8% extension and the 23% extension from the full retracement, that is also previous highs, guys. Remember us talking about the previous highs about 2 or 3 minutes ago? That also comes in right in that trading area of them previous highs. That came to the left. That's been held twice. So pretty significant level. I like the actual opportunity here to wait for the crude to get a bounce here off this rising support. We can get a bounce here. I will use a 5-minute, a 233 tick chart, one of the two, to actually wait for the trend to start being up, and then I'll start taking stair steps to the upside on a smaller micro scale. Less risky for me. I just prefer that time frame. I like to trade it. As you see, we will look for that smaller scale entry. Let me pull that up for you right now. Here it is on a 233. Like I said, we are pulling back on a 15-minute chart. We're pulling back to this trend line. Now all I need to do is I want to see this thing start to push up, get my trend lines now below me, get that support down below me, and then wait for that opportunity to the upside and continue, because we know we have that them longer term targets to the upside. But I'm willing to take a smaller time frame. This is a 233. Just keep taking the micros and the pullbacks to the upside. So lower risk, but in the direction of the overall trend. But we need to see them pop, and we need to see the dollar start selling off in order for that to happen. So some possible good opportunities here in the euro. But let's move on to crude. Crude, here we go. One of our favorite markets, crude. As we pull back here, we can see crude is in an obvious down push, guys. Once again, I'm going to go over to the dailies and pull them up. We got an interesting situation here, guys. I know it's hard to see with these trend lines here. I need to leave them room there or else I have to redraw it all. But what you see is we have a nice little push to the upside here. Nice little channel to the upside. Held once, held twice, held 3 times, and this is the 50 EMA, this red line. But now, right here's where the market's trading. We have finally broken that trend line to the upside. We have broken it now to the downside. Now, if we can close down below this 50 EMA, and we can close below that trend line, we really have absolutely nothing until we hit this 100 EMA. We have nothing until we hit that 100 EMA. Does that make sense? So we're looking at almost 300 ticks worth of move to the downside that we have between where we are now and where I'm looking for support. Almost 300 ticks worth of a move to the downside. Now, not only does that come as the 100 EMA, that also comes as the original support. So a very, very interesting level for us to look for right here around the 102 halves. Okay? So if we do get a close to the downside, as we see we're going to possibly do, guys, we have a nice channel to the downside thus far. And I'm going to continue to trade that channel until it fails. You see right now we are coming down and we're getting a little bit of a bounce here, but that's just simply a bounce off the previous low of yesterday's low of day. Getting a little bounce off yesterday's low of day. So you got to watch out for that. But still, just watch out. Make sure we can hold this downward trend line. If this trend line fails, simply look left, find the next level of resistance. I will not be looking for too many long trades until we can break this next major resistance, and that falls at the 75s. So the 105.75s. If we break that, then I got to start looking to the upside, and then obviously we have several different support resistance. But as of right now, we're bouncing off previous day's low. And it worries me if we do get up here, because if it fails this, there's a great chance of what? Previous day's high. Bounce off previous day's low. Next stop, previous day's high. Whenever we're actually looking for downside opportunities. So going to be an interesting day here. We're getting into a little bit of a pinch. We have crude inventory numbers out today, guys. 1 hour after the open, 1 hour from now. Pretty much, we have crude inventory numbers, so that could put a little spice into this market. But as of right now, I am looking to the downside on crude. I see a lot of opportunity to the downside. It's kind of that day that either crude's going to hold that upward move, or it's going to tank on down about 300 points over the next couple weeks, a week or 2 weeks. So kind of at that line in the sand today. Is crude going to hold and hold strong and push back to the upside, or is it going to go ahead and close lower and going to continue that push down to the downside? So kind of an interesting time to be trading these markets. It's going to be interesting. Bottom line, I am going to do my absolute best to do nothing but follow the trend. As you follow the trend, I know what my numbers are. The percentages go up, significantly. So follow the trends until they fail. Once they fail, then you can move on and start looking in the opposite direction. But other than that, let's watch out for the news today. Crude inventory is 1 hour after the open, and today is Fed day, guys. Who knows what it's going to bring? I can see possibly some some good trading opportunities early, and then people just kind of fizzling away and sitting on the side, later in the morning. So if we can, let's try getting at it a little bit earlier today, and then we can relax. So that's it for this morning analysis. Anybody have any questions? I'm gonna get this video up on the blog as soon as possible. I've already taken some snapshots and put them up here for us. I got the euro, the S&P, and the crude up here at the moment. Pretty well talked about this already, guys. Everything I have written here, I talked about just now in this morning prep. So I'll post this video right up above here for you guys to look at. But you can go here and refer to the charts and read exactly what I pretty much talked about just now. So, like I said, crude inventory is coming out here in about an hour, and then after that. Actually, we have the speaker coming out. That's kind of the news. But then, most important, we got Fed, guys. Stay away from the markets. 11 o'clock Pacific, 2 o'clock Eastern. Just sit on the sidelines and wait for that to come out and possibly take the afternoon off. So, any questions, guys?